Hey, 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 what's happening? Happy post 4th of July weekend. Hope everybody had a great time. Straz, I hope you had a good time. How was your weekend?
My weekend was excellent, but today's about you, buddy. Today's about you. It is Sean's birthday, everyone. So happy birthday, Mr. McLaughlin.
Hey, thank you. I turned 27 today. Very excited about that. Feel good. Feel good.
And you took
Uh,
yourself, you gave yourself a birthday treat, and you were in Las Vegas, I
uh,
believe,
I,
this
I
weekend.
went to Las Vegas this weekend, saw the Dead and Company at the Sphere, and I'll tell you, folks, if there's ever a band that you like that's playing at the Sphere someday, you have to go. It is absolutely amazing. No other concert experience will ever compare to what you'll experience at the Sphere. Is literally unbelievably amazing. So anyway, enough about that. Hey, this is the Flow Show. So what are we talking about here? This is where me and Steve come up with ideas. Steve throws some great setups my way. We debate them, we look at them, and we see if there's a way we could trade options in it. And you get to see how we put these trades together. Sometimes we come up with some great ones, sometimes some duds, but that's
Yeah.
trading, right? That's trading. So Streza, I know you got a sector on your mind that you want to talk about today. Let's what's up? What are you thinking?
So this is not, I have a story. But
Okay,
first,
let's hear it.
no, but first disclaimer. This is not to say we like our tech stocks or our banks or our home builders or our crypto trades any less, right? We're on here pounding the table about software and semiconductors and everything else over the past 2 months. Those trades have worked. They've worked for a while now. So while everybody's chasing into these leadership themes, here's XLK. Let's look at the NASDAQ 100. Well, there's last three candles in the Nasdaq 100, right? So now this
Amazing.
this this theme is well known and probably getting crowded in the short term as everybody pours back into mega cap tech, back in AI, back into large cap growth. So we want to zig while everybody's zagging, right, Sean? Right?
Right.
If you put on new trades in software, semiconductors a month or a couple of weeks ago, probably want to take some off the table here, right? These trades are overbought at this point. You probably want to give them time to dance, cool off, do a little bit of backing and filling. In the meantime, there's other areas that could pick up the slack, and I think will. No one's talking about gold anymore because this is the breakout that never was, it seems like. We every time we get up here, there's some sort of disappointment. Now that spot gold is breaking out, we're complaining about the miners and silver not being able to leave the station. I think if we zoom out enough, right, and extend our time frame, Sean, there's a great trade here because you can't deny this price structure. This is the GLD zoomed all the way out in a monthly chart, right? It doesn't take a technician to know that this is one that we buy. When you look at silver, it's a little bit different, but it's getting closer. We always talk about internally, and we were talking about it. It's what made me think of it. We were talking about it with David Cox this morning because he's a good fellow Canadian like you, Sean. So he's really into the precious metals markets. And I asked him, I said, David, why does Wheaton Precious Metals look so much like spot gold? I don't know. Nobody really knows. It's a great vehicle. It's one of the larger caps in the precious metal space. But more importantly, we just want to make the bet that it's going to look like GLD soon. So let's draw this up, and I want to see if you're picking up what I'm putting down here. Let's flip it to a weekly chart. Here's Wheaton Precious. You have a beautiful base, right? And we're right at the upper bounds of it now. Also, Sean, this one's optionable, so you will like that. A lot of
Yep.
these gold miners, junior gold miners, you just don't get much in the options market. This is Wheaton Precious, dead sideways. You have made no money since the summer of 2020, so for 4 years now. Let's look at a chart of gold. It was the same exact structure, Sean, only it resolved higher earlier this year, right? Multi-year base, only we got the breakout. Now let's compare the two. Because the bet I think we want to make here is you zoom out a bit, you give Wheaton time to play catch up, and you simply make the bet that the Wheaton chart ends up looking like the GLD chart soon. So we'll flip this to lines. See how tight this relationship is. Flip it to a daily, you can see it even better. This is Wheaton Precious Metals in black, and it's spot gold in blue. I'm going to regulate these lines a bit so that they track. And the bet we're making here, look, you could pretty much use the same resistance zone for both of these charts in this overlay. And we're simply making the bet that soon Wheaton plays catch up and looks more like this chart of gold here.
Yeah.
Right? So breakout in Wheaton, you got a sweet catch up trade. Gold already broke out of its box. I think Wheaton follows. I think if we go out, I don't even think you need leaps, but you want to go out at least 6 months because you know how these patterns take their time.
That's what I was thinking.
We're coming in late though, which I kind of like. Like when I look at this chart now and I think about gold and what silver's done, what whole precious metals complex has done, I'm surprised it hasn't left the station yet. Maybe this next like rotational phase gives some love to precious metals and this one goes. What do you think?
I like the setup and I like the catch-up trade. If you had, where would you put like a potential upside price target for this one?
Yeah, let's remove gold and let's see. I think you just measure out this base, right? So I'm looking for a
From the
target.
bottom in 2022?
Yeah.
Yeah.
So it's probably like 100% range almost. So we have a pivot low here around 29, and then a range high around 58. So yeah, call it like a double. Measure that out, $30, right? I'm rounding up. So tack 30 onto the breakout level of 58, 59, just under 90.
Okay. I was hoping you would say something like that because I like the setup and I totally agree with you that we want to probably go 6 months out. So I was thinking January.
Yep.
And right now, if we want to just keep this stupid simple, which I kind of do want to keep it stupid simple, we could buy the January 65 strike calls for 230. And if you think this thing can go to 90, I mean, those things will be worth $25 at 90.
You said 65?
Yeah.
Wow.
The January 65s, we can get them for 230 right now. That's paying the offer. You get them for 230. And like I said, if this thing goes to 90, those calls are worth at least $25.
I love that.
That's a 10 bagger.
I love that because, you zoom out on a chart like this, the underlying trend is higher off of these 2018 lows, but then you're just stuck sideways for 4 years of absolute nothingness while gold is going. These guys should be levered to the price of gold. Hasn't looked like it usually or lately. So I think, absolutely go out 6 months. Breakout probably happens sometime soon, I would think. If it's going to work, the breakout probably happens here pretty soon, Sean. And I think you're on your way to 90 for sure.
Yeah, look, that chart that you're showing right now, I mean, that's a multi-year chart. So will the stock get to 90 in 6 months? That's debatable, but it doesn't have to go that far for the January 65 calls to start showing us some profits. At least we could take half off the table if we double and then, see what else the market has for us. Obviously if it goes to 90, great, but we don't need it to go to 90. If it gets to 70, we're sitting in some nice profits.
Yeah. I think that's a good point. I think if you wanted to have a higher probability trade setup here, you could wait until we take out these range highs. That happens $2 from here. And we're already back above any VWAP that you could drop over the past probably 10 years. Definitely above the range VWAP. So I think you're almost getting confirmation that we are breaking out, and the final confirmation would come at the pivot highs of 58. What would you say about waiting? Say the breakout takes a month or 2 months, you wait, and if the breakout comes 2 months from now, you go out to March of next year and do it the same way. Would that work too?
That would work. I got a better idea though.
Yeah.
And it involves getting into the trade now. I think what we could do, if we're worried about it taking its time, is we could buy those January 65 calls now for 230. Okay. Yeah. We could then create a calendar spread and sell the September 65 calls, probably get 55 cents for them, which doesn't sound like a lot, but that's, basically reducing the cost of the trade by about 25%. That's pretty meaningful.
And you'd be selling the Septembers of this year or next?
Of this year. Yeah. September this year, they expire in 2 months, a little bit more than 2 months, and then buying the January options that expire in 6 months. And if it breaks out faster than we expect and it gets to 65 before September expiration, then we just close the calendar spread. It'll be a profit. It might not be a huge profit, but it'll be a profitable trade. It just, the amount of that profit depends on how close to September expiration we are when we get there to 65. Yeah. But that kind of at least kind of minimizes the risk of maybe we're early, right? At least we'll get, well, those short calls we sell will expire worthless, and that's a good thing. And then that means we're net owners of these long calls for cheaper.
So when you close, when come September, you're only closing out the short leg.
Yeah, I mean, ideally, what'll happen is Wheaton WPM never even gets to 65. Hopefully it gets close, right? Because that means that the trade's working for us, but hopefully it never even touches 65. And those calls just expire away worthless. We don't even need to do anything. They just expire worthless. And then we're left holding the January long 65 calls, as we originally intended. If we do get to 65, the thing about a calendar spread, for those who don't know, the P&L structure of a calendar spread, you actually start losing money if you go beyond the strikes, right? Because what happens is let's say Wheaton goes to $100 like overnight one day, right? I'm not saying that, very unlikely it's going to happen, but let's say that happens. Then the 65 calls in September and the 65 calls in January, they basically converge to be worth the same price, right? Because they're so far in the money at that point. They're both trading on nothing but intrinsic value. All the premium is out. So let's say if Wheaton's at $100, both the September calls and the January calls are going to be worth $35, right? So if you close that trade, you're basically closing it for zero, right? So what that means is whatever we pay for the calendar spread today, which it looks like it'd be about, I don't know, $1.60-ish, right? If Wheaton goes to 100, we close the thing for zero, and then we lost the debit that we paid today. The debit we paid today is the most we could possibly lose in a worst case scenario. But that's why when we get above the strikes in a calendar spread, our potential profit actually diminishes as we get further away from the strike. So my best practice, and I know other people have other ideas. I mean, we could get fancy with it, but the simplest terms, if we get to the strikes before the short options expire, I just like to take the whole thing off. It'll be a profit, which is a nice thing. It's a good problem to have, but it might not be the profit we're hoping for, but it'll still be a profit.
So I think the call calendar spread is extra appropriate for a name like this too. Like we talked about, this is one of the majors. It's not some sort of little junior gold miner where we would have to worry about it maybe getting acquired or some sort of big news, right? That pops the stock 20, 30% in a day. These guys are too big to get acquired. They'd be the acquirer.
Right.
So I don't really see that upside risk. I think this one, if it works, it breaks out and it moves slow and steadily to our target. And ideally, if we do the call calendar spread, it's on its way to 65, but not at 65 by September. And I think I like it. And you know me, usually, I'd say 7 out of 10 times, I'd probably just be like, yeah, just buy the calls.
Yeah.
But based on, I think, the likely price action to follow in a pattern like this, we probably have time. I think selling the calls makes a lot of sense.
Right. And let's be clear, like if someone watching this likes this idea and just wants to buy the January 65 calls, I have no problem with that. I think that's a great trade. We're just going to sell the September calls against it just to lower our cost and give us a little cushion in case this thing takes its sweet old time. That's, maybe we're being too conservative, but I think it increases our odds of success, and I like that.
I like it, Sean. I bought some
All right.
weekend.
Look at that. We landed at a great trade. Now I can finally put some precious metals exposure into my portfolio. I have none at the moment, so that's great. Good to diversify. And you mentioned at the top when we were kind of setting this up, and this is a big reason why I like this trade, is that we've had a breakout, we've had a bull market run, and a lot of stocks are overextended right now. But that doesn't mean the bull market is over. It just means that for the bull market to continue, we're going to need to see some sector rotation. So what's been working earlier in the cycle might not work as well next, and we need to find the next wave. And precious metals feels like a great candidate for the next wave to go higher.
And sometimes you might not want to enter a new position in something, but that doesn't mean that you don't want to let your old positions ride. Does that make sense? Like,
Yes.
I don't love going and diving into tech right now, putting on new positions, but I'm also not saying like go and sell your tech stocks. No, we're just not looking there right now.
Yeah, they're just, look, anytime you have a winning trade, let's talk about the rare case where we get a monster winning trade, right?
Yeah.
They don't happen every day, and it only takes a couple to make your year. But when you have those big ass winning trades, they're never a straight line higher. There's going to be periods of sideways consolidation. There's going to be some pullbacks. There's going to be some things where some moments where you're questioning whether you should hold this thing anymore. Those big trades, those big wins are never easy. In fact, they're the hardest trades to hold, but that's what happens. So how we ride that out is portfolio diversification, trying to find the next wave in the sector rotation to help smooth things out. Look, it's not easy. We know that. And this is how we do that.
All right. Let them dance and buy a little silver and gold in the meantime.
There you go. Our Canadian friends will be so happy. This is wonderful.
We'll make them proud. Yes.
All right, everybody. This has been the Flow Show for Monday, July 8th. We'll be back next week. Until then, trade them well. We'll see you tomorrow on the morning show. Take care, everybody.